Well, welcome to Beers with Rich, editor of Under the Radar Report. Boy, it's busy. I've just run in here. It's been a huge day in reporting season. And as we all know, we need a bit of colour and something to hang on to. So I think I've got both of them sorted with Mountain Culture's Cult IPA. Comes straight from Emu Plains, foot of the Blue Mountains, Sydney. Go the Panthers, go the Penny Panthers. Let's crack it, it's cracked. Well, these aren't easy times to invest, I know that. Prices are moving up and down, in and out. It's a bit crazy out there. Many of you probably worried you're not making money. Well, I've been disappointed with one of my favourites, that's for sure, the Forex Services Group, OFX. On the other hand, I've been mightily encouraged by the near doubling of IT services provider Integrated Research, and also by the, that's only in 3 months, also in the 50-60% spike in Hello World Travel, used to travel, and the cab services group A2B, let's not forget them, 30% in a month. It's all happening under the radar. So, what's the takeouts? Well, we're in the middle of reporting season, and the big takeout for me is contrarian investing works. And that's what we're talking about. Somebody's trash is somebody else's treasure. You can find it in there, stuff people throw away. You can make it work. So the key is working out what the expectations are that are embedded in the share price, which is where value comes in. So what I'm talking about is the theme that's emerging out of reporting season, which is basically when we had low interest rates, valuations didn't matter, you just hopped on board and waited for it to climb and then hopefully hopped off. Now that interest rates are rising, well, the numbers and the share price reactions to them indicate that valuation does matter. People don't want to pay too much. When interest rates rise, cost of capital rise, people have their value glasses on in that situation. That's going to stay with us for quite some time, as the numbers from the central banks around the world are indicating. So momentum investing, it works for a bit, but it doesn't work long term, and it certainly doesn't work for long-term investors. You need a portfolio approach that and you need to look for stocks that you consider to be good value, which luckily for you is where we come in. Well, as I said, we don't always get it right, but when you do, your wins far outweigh your losses. That's partly a function of your losses are limited to the amount you invest, which is why I never advocate, leveraging your investments, borrowing to invest. But certainly, the leverage that you have in these small caps is all too evident. We saw negative leverage, sure, with Domino's Pizza, but what we've seen is the positive leverage that can occur. Domino's Pizza is down 25% or something this week. What we can see is the positive leverage that occur when you don't pay much. Integrated Research, they do basically, they enable big corporates with critical data to monitor, service in real time and to troubleshoot. So, the stock might be up 50% now, but when we looked at it 4.5 months ago, it was, trading at less than 10% of its valuation based on only 18 months prior. So in late 20 or mid 2021, mid 2020 was $5. When we picked it, it was 30 cents. So now it's like 50 plus cents. So it's still a fraction of that valuation. So that's what we're talking about. Contrarian investing requires bravery. Often when I mention stocks that are severely out of favor to, some people like fund managers, friends, or they actually laugh at me. And their response is incredulous, and I won't repeat some of the words they use because this is a family program. But the point is you have to be brave. And when you're being brave, you need to do your research because, you don't want to be stupid. So one of those points of research that we bring to bear in our process is a heavy concentration on the balance sheet, and that was certainly the case with integrated research. Broking analysts tend to just look for the upcoming sort of earnings. Is it going to match or beat expectations on that front? We put a lot more emphasis on the balance sheet, and we looked at Integrated's balance sheet and saw that their inventories, we saw that the balance sheet was really strong, such that their receivables were high. So basically we knew that ensured the valuation of the stock. So you've got to have buffers. The point is, you've got to have buffers when you're being brave. And that's the case with A2B, the cab services group. And that was basically, in many people's mind, roadkill, run over by the ubiquitous Uber. So why did we tip it last year? Well, I think this requires a beer. Because, you're stepping into the cauldron, aren't you, when you see severely disrupted stocks and you're stepping in? Well, one thing we saw value was they're evident because they had this huge property portfolio, but that was, there was lots of shenanigans at the top of the company, so this was being obscured a bit. But then exit stage left senior management, and those guys are being replaced, and then they sold they sold one of their properties. So we see valuation, sort of value being realized. And the other thing is that A2B clearly benefits, even though it's disrupted, it clearly benefits from the opening up after lockdown. I mean, you just have to see the movement in traffic to understand that. But we knew the company was increasing its fleet. What we underestimated was the value add that they were doing by retiring old cabs and moving things like Silver Service into the fleet, so higher yielding cabs. I mean, I use Silver Service myself. So basically, I think it's a really good service, and that does help. It never, a bit of road testing never goes astray. Speaking of which, this beer's not bad. It's quite sharp, but it certainly doesn't live up to the tropical sort of advertising, but it's cultish. But the main takeout here is that if you're going to be contrarian, as I was saying, you need to do your research. And that's where we come in. We really help you gain that confidence that you need when you're putting your hard-earned cash on the line. So what's up for next week? Well, we did 12 stocks this week, 8 of which we rate as buys, so opportunities. Next week, we're going to do at least more, because reporting season is coming to a grand finale. With the end of the month, the end of February. So we'll be covering stocks big and small in our small caps publication and our blue chip publication. So there's a lot. There's going to be a lot to digest, but don't worry, we make it easy for you. Anyway, looking forward to talking to you next, or speaking with you, speaking at you, whatever you call it, next week. Cheers.